Well, hello everybody. Welcome to yet another webinar here with us at Western Marketing. My name is Jim Codney. I'm our National Sales Director here. As you see on your screen, we're going to talk IUL Express or IULE with Mutual of Omaha. So I'll introduce our guests here in just a moment. But a couple of housekeeping things and stuff to go over really quick. First of all, thank you very much for spending time with us today. We're going to try and rock and roll through this, get you out in much less than an hour, unless we need to be on. If you've got a bunch of questions and we need to be on the whole hour, pardon me, we'll do it. But if not, probably 40, 45 minutes roughly is what we're looking at today, just rough estimate. We're here for you. If you have questions, ask. There's a question box. Type your questions in that question box. As long as they are not about something specific to you or a case you're working on, we'll talk about it here on the webinar. So if you have questions about the product, about Mutual of Omaha, about the barber Kurt and I use, because obviously we use the same barber, feel free to ask. But again, we're here for you, so ask those questions. So we started this series 4 weeks ago, and this is the last of a 4-part series. And so week 1, we talked about, how to double your income. And in the last series, we talked about that. It was about offering index annuities. And so we reviewed that and then talked about also offering IULs. Then we talked about some other things like utilizing the fact finder as a tool for prospecting, et cetera, over the weeks, and really what a IUL is, et cetera. And today, and this is the last of the 4-part series, we wanted to leave you with information on one of our favorite IUL products in the market. Not only is it competitive, not only is it offered from a great partner carrier and friends of ours with Kurt and Cindy, but it's competitive, and so if it's not a good product, it wouldn't matter how nice and how much we love Mutual of Omaha if the product wasn't good. So it's a good product, and the process is also really good. It's an express product. I won't steal Kurt's thunder, but it's easy to write. And in this world of labs and parameds and everything else, sometimes simple is good. Actually, a lot of times, if you can get a competitive product, I actually like simple, right? Because it's easier on you, but it's also easier on your clients. And so those reasons and more are why we've chosen to have Mutual of Omaha's IULE as kind of the cleanup hitter in this 4-part series. So again, if you have questions, ask. And with that, I'm going to introduce our partners on the webinar. So we've got Kurt Williamson and Cindy Birch from Mutual of Omaha. They are my go-to with anything life related at Mutual of Omaha, and they are happy to help. So if you ever hit me or our team with questions, need help with Mutual of Omaha life products, Kurt and Cindy are typically who get the call or the email after you call or email us here at Western Marketing, unless it's something simple that we know. So with that, I'm gonna shut up and pass it to Kurt. Kurt, welcome.
Awesome, thanks, Jim. Guys, as always, Cindy and I appreciate the chance to work with Western Marketing. You guys are doing phenomenal business this year, without a doubt. So it's always fun for me. Just real quick, for those of you that don't know me, I've been in this business for give or take 30 years. Cindy as well. I was a producer before I lived this life of working on the carrier side. My background, oddly enough, is fairly similar to Jim's. We kind of have done a number of different things in this industry. So I've been around a bit, and I do things a little bit different. Along as we're talking about the product, and I think that I would stack Mutual's product up against just about anybody's, but it's also a little bit how do you talk about it, how do you bring it up, and how do you sell it. Important thing also to note is that you guys have a great group of managers at Western Marketing. You have all the resources you could ever want, and Jim knows that if there's anything strange that comes up, that Cindy and I are the go-tos for that, without a doubt. So let's get into an IUL Express, all right? IULs are all the rage. right? That's a big deal today. Everybody wants to talk about IULs. Everybody wants to utilize IULs. And what I will tell you is that there is an insane amount of misinformation out there. My daughter, I'm an old dude, I'm 56. My daughter, and Cindy and I talk about this all the time. It's actually kind of funny. My daughter's 32. She will bring me TikTok videos and she's like, look at this. And if my daughter knows it's baloney, you'd be surprised just the garbage that's out there. And it doesn't have to be. And the cool thing is that our IUL Express is number one, the first truly Express simplified issue IUL on the market. There's a couple others that are coming up, but they kind of lean on more of the accelerated side where they may or may not do labs. I will never ask for labs with an IUL Express, right? No blood work, no urinalysis, no attending physician statements. This is entirely data driven. So we'll get into this here. Oh, come on now. All right, Mutual of Omaha. Guys, you'd be hard pressed to find anybody that doesn't know who we are. I mean, we've been around for 114, 115 years. So even with the IUL Express, we're a well-known brand. Utilize that. That's a bit of trust that you can borrow from Mutual of Omaha that helps you with your business. You got a dedicated team. Again, you have your great management staff at Western Marketing, but you also have access to Cindy and I. So if you need additional support or trainings or stuff like that, throw it at you all day. Fast and simple underwriting. I got 26 different awards this year for fastest to issue, fastest to pay in our simplified issue portfolio. When we design products, we look at it with two core things. Number one, how do we get it to your client as quickly and cleanly as possible? And then how do we get you paid? Because we know that you're all business owners, right? So if we're getting you paid, that means you're impacting more clients, we're covering people the right way. So that's important that we do and structure our processes that way. Here's a couple different numbers for you if you need them, right? Sales support, these are guys that can help you with WinFlex illustrations and product questions and all this. Underwriting, express risk assessment at mutualofomaha.com. You shouldn't even need that anymore. 3 weeks ago, here's something that came out I'm gonna let you in on. There is a system that is running in the background of all your applications right now with simplified issue, primarily IUL Express, Term Life Express, and Final Expense. It will tell you before you ever submit whether or not your client is likely to get a policy issued. It will say trending favorably or trending unfavorably. If it's unfavorable, stop what you're doing, don't submit it to us, we're not going to write it. But if it's trending favorably, that's a good indicator that, hey, all the data that Mutual is pulling so far looks good. There's a high chance, 99.999996% chance that it goes through. Does something happen 1 out of a couple million? Yeah, but ideally that percentage hit ratio of something trending favorably without you ever having to submit it is a great thing. Here's what I will say. If you are doing that application and you see at some point it says trending unfavorably, stop what you're doing. It won't count against you. It won't count against you in placement or anything because you never hit submit, so it doesn't go anywhere. But that's a good point for you to pause and go back to your client and say, hey, when I was putting this together, looks like we were pulling some information that this wasn't going to trend too favorably. Is there something I missed with you in terms of health or something that maybe I need to know, right? It's a good place for you to go back and double check with your clients. But ideally, you should never even need this express risk assessment at Mutual ever again with the program that's running in the background. Not saying don't utilize it, but really, it's already built into the system. And then iPipeline. Yeah, everybody knows iPipeline. So when there's tech problems, that's a number for you. So who's this product designed for, right? There's a lot of different instances where you can use IULs. What I will tell you is this. Anybody that wants to dump a bunch of money into an IUL and pull it out real quickly and utilize it as some kind of get rich quick thing, this is not a way to do that. This is life insurance. Let me say that again. This is life insurance with an added benefit of a way to accumulate some money down the road. Right? It's not a way for you to make a bunch of money in a year or two. And I see people doing it all the time, or trying to. It doesn't work that way. It's life insurance. We'll talk about the mechanics of that here in a minute. IUL Express. Clients looking for permanent coverage, right? IULs are a form of permanent coverage, right? At affordable rates. Those approaching retirement who are beginning to plan for final expenses. Well, wait a minute, Kurt, don't you have a final expense product? Yes, I do. It's called Living Promise. But maybe they want the flexibility of an IUL because that's what an IUL offers. It offers some flexibility. Or maybe they want more insurance than you can get with a final expense. Our final expense goes up to $50,000, but maybe they want more. With our IUL Express, you can get up to 300,000. Just depends on their age and a few other things. Parents with young children at home looking to replace lost income. Okay, same thing as most other life insurance products, but you can utilize it in this instance as well. Clients who just purchased a new home. Sounds like mortgage protection. Well, yeah, you can utilize it in that fashion as well. Clients who need their coverage issued quickly. We can turn IULs, and we actually have many instances where we will instant issue IULs. Because with our IUL Express, we treat it like all our other simplified issue products. We are literally pulling data. We have 3 proprietary data sources. We use the MIB and as well as IntelliScript, and we're going to base our decision on what we get from those sources along with how you filled out the application, right? So we're going to compare those, and we have a number of them that get issued on the spot. I haven't heard of a carrier issuing them that quickly, except Mutual. Again, I know there's a couple other ones that are getting into the game, and hopefully they're competitive. I'd like to see that. I like the competition. But ideally, if you don't want to have to deal with attending physician statements, making sure your clients have to go get their physical and chasing all these things down, IUL Express is a great option for you, without a doubt. Who else? Again, people who want permanent coverage already beat this horse to death here. Don't like needles or lengthy health exams, right? It's based on their answering to the questionnaires or the answering the questions on the application, along with the med data that we pull, right? So again, never going to be a urinalysis, no blood draws, nothing like that. I wanted to show this. Here's, and Cindy knows, and Cindy giggles every time I put this dang slide up, but I include this in almost every presentation, and I do it for a reason. This is who it's built for. This is my daughter, Taylor, my grandson, Caden, and my son-in-law. He's tolerable now because he's giving me grandbabies. So, but think about this family and think about ways you can protect it. You can do, in this instance, if you're working with this family, IULs on father, mother, children's whole life on the kids. Here's the other reason you want to work with them. That happened to me back in February, grandbaby number 2, right? I'm showing you these photos for a reason, because it fits all ages. And if you think about, this is the family unit that I want to protect, you can bet the first thing at each step along the way, when grandkids were born, when the kids got married and all that, yeah, I was there to talk to them about life insurance. Do it all the time. IULs play a big part in these guys. Here's how it works. And this is this is part of the misinformation that's out there. I've heard goofy things like, well, you pay your premium, then I have instant access to the death benefit. Absolutely not true. That is so far from the truth, it's not even funny. Let's talk about what this is. And it's literally 2 sentences. If you can't explain a product to your client in 2 sentences, stop what you're doing. It's literally, every time you make a premium payment, a portion is going toward your death benefit, another portion is going toward an accumulation bucket that will give you options down the road. That's it. That's an IUL. That's every IUL that's on the market. That's exactly how they work. But the problem comes when you try to describe what happens with the accumulation, right? In order to keep a policy balanced, and what I mean by that, where you keep the premiums the same, you never increase them, and carry that throughout the policy. Well, how do you do that? Well, think about it. When you're younger, insurance costs less than when you're older. So how are we able to do that? We can utilize the accumulation value that's built to compensate for some point down the road when your premiums are no longer meeting what it would cost to insure you. Again, that doesn't mean we're wiping out your accumulation value, but we use that to keep the policy in force and keep your premiums level. How does the accumulation work? It usually works one of 2 ways. It's either going to be on a fixed or currently declared rate, which means that, hey, when you design this, you want to go in here and select the fixed rate, and it's somewhere around 2%. And that's for clients who don't want their money subject to any benchmarking, or it's indexed based on the S&P 500 performance. The majority of the players out there do have some type of benchmarking involved. So what this is, and this is a good way to explain this, your money has the capability to get all the good that occurs with gains in the market without being exposed to the risks. The money is never in the stock market, it is benchmarked against it. What that means is every time you make a premium payment, that portion that's going toward the accumulation, it's going to be put into a siloed cell, and it's going to be looked at, in our case, hey, the S&P 500. So for instance, this month, we're going to take a snapshot of, here's what it's going to look like or here's what the S&P 500 is at this point in time this year. 12 months from now, we're going to come back and look at that, and then we're going to index it or credit it accordingly. So if the S&P 500 gained between now and then, awesome. Depending on how we choose to do this, and there's 4 variations on how we can credit it, it will be credited accordingly. If the S&P 500 drops, zero's your hero. They're not exposed to any negative aspects of it, so they won't lose money in their accumulation. That's the cool thing about this. That's the exceptionally cool thing. Here's what it looks like, and I kind of put together this table because there are some nuances that are different with an express product versus fully underwritten. I'll touch on fully underwritten, but we won't get too much into that today. Issue ages 18 to 75 for non-tobacco and tobacco. All right. Face amounts. There are 3 different age bands or 3 different bands, death benefit bands for different ages. 18 to 50, you can go from 25,000 at a minimum up to 300,000. From 51 to 60, it's from 25,000 to 250,000 in death benefit, and from 61 and up, it's 25,000 to 150. There's 2 risk classes: standard non-tobacco, standard tobacco. Indexing strategies: 100% participation, high participation, lower participation, Bank of America Agility Index. What the hell does that all mean? All right, what I will tell you is when you are utilizing the IUL Express with Mutual of Omaha, you stay with the default, which is 100% participation. The reason why is that you don't want to have to get into the explanation of all these crediting strategies. Are there some good points and bad points to all of them? Yes. This is not where you're going to monkey around with them. Stick with the 100% participation. What I will tell you is all 4 of them indexing strategies track within about a 1/4 point to a 1/2 point of each other historically when we do some back testing. So I don't see a giant advantage of one over the other yet. I'm curious to see this Bank of Agility Index one is relatively new, only had it for a year. But again, past performance is no indicator of future. So what am I going to do? I'm literally going to leave it at 100% participation. What's the other problem with IULs? Well, typically you have to do some kind of WinFlex illustration, right? Anybody like monkeying around with WinFlex? I don't mind it. I mean, I do it quite a bit, but it's not like where I want to spend my time. You don't have to do a WinFlex illustration with an IUL Express. Should you choose Easy Solve, and I would recommend that you do that all the time with an IUL Express, it will automatically default to this 100% participation, and it'll create a balanced policy that will last a minimum of 20 years, or, and that's if it never gets credited, or out to the age of 120. Now you should be saying, well, wait a minute, Kurt, didn't you say this was a form of permanent insurance? Yes, it is a form of permanent insurance if it performs like it should. If the S&P 500 that we utilize as a benchmark explodes, goes to hell, and never gets credited, okay, well, then some other things may happen. Has that ever happened in the past? No. Do I think that's ever going to happen in the future? Also, no. Why? Because there's too much money involved in that. So I don't think that's ever going to happen. And here's the cool thing. www.simplified or mutualofomaha.com/simple has got our historic crediting. You can go in there and look at what has Mutual of Omaha credited, and that's a whole nother presentation we can get into the nuances of that. But know this, keep this easy. This is meant for easy cases. This is not meant for you to get in here and manipulate all this different stuff. It is literally meant for you to get in here, do a policy for somebody that understands exactly what this is. And I'd encourage you guys, ask that question. What do you want your insurance to do for you? Ask your clients that question. That's a good guide of where to go with this. But if you choose Easy Solve, our system will automatically create an NAIC compliant illustration. When your client signs the application, the signatures will automatically be applied to it. You will never have to monkey around with it. So keep it easy. Don't get too involved with the indexing strategies. If you do want to learn about them, and again, that's something we can get into down the road, but stick with the default. It's a good performer. Historically, it's been great for us, so stick with that. Permanent insurance solution, right? Simplified underwriting, we talked about that. In addition to the death benefit, IUL Express also has the potential to accumulate a type of cash value, which is credited based on the performance of the S&P 500. I can't hit this enough. It's based on the performance, but it is not in the stock market, right? We just use that as a benchmark and a way to credit. Again, here's how it works. Cost of insurance increases as the client gets older, okay? That doesn't mean premiums increase. That's not what this is saying. When we're designing a product, an IUL, we understand that to insure somebody at the age of 20 is different than to insure somebody at the age of 50. Okay, so how do we do that where we keep the premiums affordable, but also allow them to accumulate some more aggressive money along the way rather than your typical cash value that's done in the whole life policy? At some point in time, the client's premium is no longer going to cover the life of cost of life insurance. That's okay. We already understand that, because in the design, we start taking money out of the accumulation value to help cover the higher charges and keep the policy in force throughout the client's lifetime. Every IUL works the same way. It's no different. That's what an accumulation is for. So again, going back to the main reasons and how it works, every time you make a premium payment, a portion goes toward the death benefit, the other portion goes toward the accumulation bucket. That allows you to do a number of things. And I'll show you some options here in a minute. But this is the basics, and this is what I want you to understand. And when you're trying to educate your clients on this stuff, this is exactly how I describe it. If you get into indexing strategies and point-to-point crediting and all these other things, your clients, number one, don't care. Well, I shouldn't say don't care. There are probably two people in two occupations that will care. One of them will be engineers and the other ones will be project managers. Those two will maybe care, but at the end of the day, I look at it as like you're peeling an onion, right? It's, hey, this is what it is. This is the problems that you told me. This is what it solves. If they want to get into the inner workings of it, great. But at the end of the day, I'm not getting into that. There's no reason to. Here's some value adds. Again, minimum guaranteed coverage for 20 years. Okay, that means, again, if the S&P 500 never gets credited mutual, it'll last at least 20 years or up to age 80, depending on the age of the person. The ability to have coverage to age 120. This is the most likely scenario. When we're doing these illustrations, we base on an average crediting of around 5.9%. The historical average crediting with mutual is around 7. So we know that on average, these policies, when they're put together correctly, and again, that's what the Easy Solve does for you, will carry out to the age of 120, longer than any of us are going to be around. Built-in features. These are our living benefits. Chronic, critical, terminal illness. Here's the best way to explain these, and I don't get too carried away with these either. I like to keep these things fairly simple for my clients. And I don't want you to mistake when I say this that I'm not disclosing everything to my clients. That's not what this is at all. But I'm very much in tune with what's called concept buying and concept selling, right? I want them to understand the concept of what I'm talking about, the basic mechanics of how this works, and what problems it solves, right? So if I'm in a competitive situation and they say, well, what happens if I get sick or whatever? I'm like, hey, you can access a significant portion of your death benefit if you have a terminal, critical, or chronic illness. That's it. I don't go any further than that. That's what they need to know. That's an important feature. Those are built in. Those are not anything that costs your clients extra. And they're called living benefits, and they're great. And again, I'll show you what I'll do when I get done with this presentation. I'm going to show you the simplified website where you can get into some more details of it. Competitive cash value accumulation based on the S&P 500. Again, based on the S&P 500, it's benchmarked to that. It's not in it. It's not in the stock market. So you can realize the performance of it without the risk inherent to it. Exact same underwriting as our Term Life Express. There is no difference between this and our Term Life Express. And oh, by the way, for those of you that do write Term Life Express, I do appreciate that. Keep in mind that you can convert that to a standalone whole life policy, or you can convert a Term Life Express to an IUL Express. We're one of the few companies that will allow that in the simplified issue. No cost riders. These are included with all our IUL Express. The living benefits, terminal, chronic, critical illness. Waiver of surrender charges for partial withdrawals. Guaranteed insurability rider. What does that mean? That means at certain life events, like when they get married, buy a first home, birth of their first child, they can ask to increase their face value. You also hear it called specified amount. When you hear the term specified amount, it means death benefit. But the guaranteed insurability rider means that they can go in and increase their death benefit without any underwriting, right? And again, it depends on their age and all this when they decide to do that. But that's a quick phone call. Hey, I'd like to bump my insurance up 25, 30 grand. Okay, great. Can I do that? Sure. Because we don't require any additional underwriting with that. Lapse guard rider. What does this mean? Lapse guard rider means that if, for whatever reason, you're behind in your premium payments, we're going to take money from the accumulation amount to keep the policy in force as long as we can, because if you take loans out against an IUL and your policy lapses, that creates a taxable event. Well, we don't want that happening. So we designed this for a reason. That's why we have the lapse guardrail. And that's included, again, no cost. Here are a couple ones, different ones that you can choose to add if you would like. What I would say about these is probably that the majority of you will never use these, because if you're utilizing this the way I think you should, which is the Easy Solve, these are not available with the Easy Solve. And again, Easy Solve is one of these that keeps it streamlined, keeps it easy. You don't have to create an illustration. It does it for you. Should you choose to do an illustration, you can. You can overfund these just like you do a fully underwritten. You can do all kinds of different things with it. But for me, if I'm using an IUL Express, I'm doing an Easy Solve because I want to keep this simple. But at any rate, should you choose to, if you want to design and do a WinFlex design yourself on this, you absolutely can. Here are 4 cost riders, so added cost riders that you can add to the policy should you choose. Accidental death benefit rider provides an additional cash benefit in the event of a death due to a covered accident. Disability continued plan of premium rider. If you have a covered disability, the rider will contribute a certain amount to the policy while the disability continues. That's just to kind of keep it in force. So if you get hurt, can't work, and it's what we would term a covered disability, it will help keep the policy in force. Disability waiver of policy charges. All right, that's very much the same thing. It's just a proportionality difference between that one and a planned premium. One of them is policy charges, one of them is the premium. Dependent children's rider. From the age of 15 days up to the age of 20 years, that is a rider that you can add on our IUL Express. But again, guys, if I'm being honest with you and keeping this simple, I'm never doing these. That's not that I don't think they're valuable, I do. But for me, if I'm doing an IUL Express, I'm choosing an Easy Solve, and I'm keeping this very simple for my clients, because let's be honest about it. Why would we do an IUL Express when you and I both know that Express and simplified products probably cost a little bit more than fully underwritten? Why? Well, I'll tell you why. Every time you make a sale to a client, you're making 3. You're making 1 to your client, that's the obvious one. Number 2 to yourself, is this the right thing I should be doing? And number 3 to the carrier. Hey, Mr. and Mrs. Omaha, this is why you want to write this. Because we know less information about this particular client with the IUL Express. Again, keep in mind, this is all data driven. There's no physical here with this one. We know less. With less knowledge comes more risk. What does higher risk mean for an insurance company? We're going to charge a little bit more. Now, is it like double or triple? No, not at all. It's not. It's very competitive. And in some places, it's very close to the, again, depending on the age, to the fully underwritten. But there's a cost to convenience. There's also a reason that I sell a boatload of this. I'm going to sell $250 million of this year. And it's a huge amount because it's extremely powerful and it gets your clients covered quickly rather than on average somewhere between 16 and 30 days for a fully underwritten. Okay, I know which way I'm going if I can manage it. So just a couple ideas for you, and I'll show you a place if you want to learn some more about those particular riders. Again, they're just like I described, not too tricky. Oop. So here's some crediting, and I want you guys to see this. This is about the Easy Solve, right? And we can see that here's what the S&P 500 returned since 2002. This table goes up to 21, right? 2002, it had a negative 23%. Okay, what did that mean? Well, that means that in the accumulation amount, your client didn't get hit. They just didn't get credited anything that year. Okay, great. Next year, it went up 26.38%. Awesome. Well, in this instance, we credited them 9.25. Well, why did we do that? Because Mutual of Omaha took the bath of negative 23.37. So because we take the risk when the market's turned down, that's why we have a cap, right? Our cap right now on the 100% participation is like 9.5%, which means if the market goes up 20%, the most they're ever going to get is 9.5. If the market goes down, the worst they're ever going to get hit is 0. 0 is your hero. That's a good thing. So you can see several instances there. Look at 2008. Everybody, you know, I'm sure there's some folks been around since then. That was why I remember watching my 401k and crying because it was ridiculous. I knew it was going to come back and I had the time horizon, but If they had their money in the market, they would have lost almost 40% of that compared to the fact that, hey, they just didn't get credited that year. All right. And then in the ensuing years, 9.5 or 9.25. So keeping it in mind and understanding why we do this the way we do is that the insurance company takes all the risk in terms of a negative market return. Your client takes zero. Right? That's a good thing. Here's an instance that I'll show you. And again, going back to the historicals, I won't beat this too much. If your client, or if in this 100% participation, we'll say the cap is 9.25, right? If this year compared to next year, the market went up 7.5, we will credit them 7.5. If the market goes up 15%, we will credit them 9.25. Why? Well, our cap is 9.25. If the market dropped 38%, then what would we credit them? Well, we just wouldn't credit them anything. Again, that's the reason we do this, is because the insurance company takes the risky years. Your client benefits from having their money benchmarked against a pretty well-performing index, I would say. Two ways to do this. You can literally do most of the quotes on your phone. You can run an IUL quote on your phone. Those of you who use Android or Apple, just go to Quotes for Sales Professionals. You can download this. Literally, you can do them all. You don't have to run an illustration. You can run all of our simplified issue products right off your phone. If you want to do a full-blown illustration, great, go ahead. You can absolutely do that. But again, my rationale in my brain is that if I'm doing a express product of any kind, if it's going to do it for me, yeah, I'm going to do that. I don't like playing around in WinFlex all that much. But should you choose to customize it a little bit, yeah, go free. Nothing wrong with that. Again, it automatically, it automatically illustrates the easy solve. Signatures are going to be applied. For those of you that have played around in IUL space before, you all know that typically in the middle of most illustrations is a place your client has to sign off on. It's a disclosure page. Talks about the performance and the benchmarking, whatever company it is. If you utilize the IUL Express, when they sign off digitally on the application, those signatures will be applied to a self-generated illustration, and you'll never have to play around with it. That's a good thing. That makes this easy, and that's why I can turn these in, a matter of a day or two. And again, even some of them I get instant issue. That's pretty cool. Here's the power of an IUL Express, right? Again, it works like every other IUL in terms of just the basic mechanics. But what if I don't want life insurance or need as much in 30 years? Okay, great. And in this instance, we'll say the guy's 33. He bought a $250,000 policy, and he was getting to retirement age, right? We'll say he was going to turn 63. And he said, you know what? I don't want to make any more insurance payments. I don't want to make any more payments on anything. What could I do that? Yeah, that's the flexibility of an IUL. Here's what's going to happen. Right there. He called Mutual and said, hey, I've been paying on this policy for 30 years. I don't want to do it anymore. What could I do to have a paid up policy? So in turn, if it performed like this, and if the average return was 5.87, he could call up and say, hey, you know what? I don't want to make any more insurance payments. What would that look like? We'll say, okay, we'll drop your death benefit from 250 to 200,000. Done. Keep it till the age of 120, right? That's the power of the accumulation bucket within an IUL, because it gives you flexibility. He could also take out tax-free income out of it, right? If he took a loan against the policy and it was still in force and wouldn't lapse, that money, the loans taken out against IULs, are a non-taxable event, right? But for me, again, you can utilize that as an income stream in retirement and all this. I like this. This is exactly what I'm doing with mine. When I turn 67, done. I will have no more insurance bills. But that's the cool thing about when you talk about how an IUL works. Hey, well, what's this accumulation bucket for? Well, it gives you options down the road. It gives you a way to use and get some tax-free money down the road. It also has a way for you to potentially have a paid up policy, right? That's a good thing. Having options with an IUL is pretty powerful stuff. Go to this website, mutualofomaha.com/simple. Product resources, all this great stuff is in there. It literally gives you details on all our simplified issue products. What I'd encourage you to do, definitely with IULs, along with these training videos and that, I want you to look at the specific IUL training videos. They're very good on understanding the mechanics. I think I do a decent job about it because I like to keep it simple in my brain, because it's hard for me to keep track of everything that I do know. So I know where my resources are at, and I'd encourage you to do that. That's an important part of it. The other part of it is that get a couple ways of explaining it, because you're going to have clients that may ask different questions or may need the product positioned a certain way for them to understand it. Great, I got all that stuff. I got client-facing brochures, highlight sheets, all this stuff. Highlight sheet I still use. I keep that in front of me when I'm talking to clients. Here's 2 videos. These 2 videos are awesome. They're 10 minutes or shorter in length, right? IUL Express, protection that lasts. The producer training video, both of those are great. It helps you identify the target market, how they work, how you can go in and quote it. And I think just as importantly, how do you talk about this with your clients? How do you bring it up? Again, I fall back on the fact that I'm big on the concept selling side, which is I'm going to introduce them to the concept that solves an issue that they said to me. I'm always going to ask the question of, what do you want your insurance to do for you, right? And then they're like, oh, I just want it to cover me when I die. I'm like, okay, well, what does that mean? Do you want it to cover just your funeral expenses, or do you want to leave a little bit? Do you want to cover this, that, or the other? So there's a deeper question involved there when I ask that question of, what do you want your insurance to do for you? But those 2 videos do a pretty good job of explaining it. There we are, me and Cindy. Again, guys, you have your management staff by far, and those guys at Western, Jim certainly included, probably just as knowledgeable as I am. I mean, I'm pretty good. I've been doing this a long time, but I'm also a Mutual of Omaha guy. But without a doubt, if there's something that Cindy and I can certainly do, we'd be glad to help you. But I'd entertain any questions. Again, the idea behind this, and I kept this really short, but that's how I want this in your head. I don't want you to think that I need an hour and a half to explain this. I don't. Even the most complex IUL I can do to any client, I can explain to in about 15 minutes. I don't need much time to do it. And that's what you should shoot for, because if you go longer than that with your client, or if you've ever heard the words, you know what, this is great information, let me take this back and think about it, I guarantee you went too far.
All right, thanks, Kurt. By the way, like the dark beard, obviously that photo was taken a couple years ago, but I like it.
Come on, man, that's not fair.
Now's the time for questions. So if you have questions about Mutual of Omaha's IULE or anything Mutual of Omaha life related, we've got 2 experts here. So just type it in the question box and we'll get to that. As I wait for some of those to come in, I did want to talk about a couple things. First of all, we've talked in this series about leveraging the fact finder, the confidential needs analysis, whatever we want to call it, right, to find opportunities for not only IULs, but also sometimes annuity business. So let's talk briefly of where I feel, based on what we've already talked about in this series, Mutual of Omaha could fit in. First of all, if you ask the client if they have long-term care coverage, they say no, and their retirement is not self-insured, an IUL with living benefits is a great option. And Mutual of Omaha's got one that Kurt just talked about. If they have life insurance already, what a great opportunity to say, hey, do you mind if I just review what you have? You may be in a perfect situation, Mr. or Miss, but let me just, as your insurance professional, do you mind if I just look at it? Because I might be able to get you more coverage for less, more coverage for the same premium. I may be able to put you in a better position depending on what's important to them. So great opportunity. They don't have life insurance. They aren't self-insured. Obviously, IUL could be a really nice option for them as well. And last, but definitely not least, right? If they want to leave a legacy, kids, grandkids, church, charity, whatever we're talking, this is a really nice opportunity. Some people don't have kids or grandkids that they they may already have them taken care of elsewhere, and they want to give back to somewhere else in the community that's important to their heart. We can do that. So some great opportunities as you're going through that fact finder to uncover potential Mutual of Omaha IULE opportunities. Keep in mind why Mutual of Omaha, specifically IULE: simplicity of doing business, and competitive rates. Those two things. And really, if I'm on your side of this conversation, trying to figure out who I'm going to offer to my clients, those are two, if not the only two at the top. They're very close, right? Because if they aren't competitive, why are we talking to our clients about them? And B, if it's not simple for you and them, then it's a pain in the butt, folks. And who wants that, right? Who wants? I know clients. I've worked with clients when I was out in the field that literally have what they call white coat syndrome, and so they get very nervous when it's a true term, Kurt. But they get very nervous when they go to doctors or if somebody comes for a pyramid, especially when a needle is involved. So their blood pressure goes through the roof. Their body reacts differently than in a calm situation, which literally could be the difference between how they're rated if they're having to go through labs. So keep that in mind. And one thing that's new that Kurt brought up briefly, I think is awesome, where they auto predetermine yes or no. Basically, they red light, green light. For those of you who want a more simplistic term, I'm going to tell you guys my perspective is if it's green light, keep going. It'll probably get approved because they're running all the MIB script check. I sat through the training on this right as they were launching it. It's really slick. If they say it's not going to pass, don't waste your time, and for sure don't waste your client's time, because this is what they're trying to do. They're trying to help save you time. And if I'm you, time is money, right? You could be then take what you would have done just drudging through this application and trying to force them in a mutual IULE. Now you're able to pivot to another opportunity with a carrier that should take that business. But also what it does not count against your placement if you stop and don't submit. All right. Good carriers like Mutual of Omaha, that matters. Your placement percentages matter. All right. It can make a difference between whether if you're in good standing or not. Now, granted, one case probably not going to get you in trouble, but a lot of cases that don't go through, they're going to give us a call and say, hey, what's going on with, Tom in Omaha or whatever, whoever, right? And then third, and actually probably just as important, is it doesn't count as a decline on your client. So if you don't hit submit, your client does not have a life insurance decline from this instance on their record. What does that do? It makes it easier for them to qualify for life insurance, even whether it is you pivoting to a different carrier or them looking for life insurance down the road. Because most apps are going to ask, have you ever been declined or delayed for life insurance, right? And that's a question most of you have seen it on the app. If they're answering truthfully, they're going to have to answer yes if you go through and don't pay attention to the red light. So, I think it's awesome that Mutual's done this because it helps everybody in the process. It helps them, absolutely, folks, but it's not one-sided. It helps you and your clients, and frankly, it helps us because you aren't calling me mad at Mutual of Omaha for stuff over these little things. So really great company, great product. Let me look. I know somebody put their hand up, so let me get in here and see. Clyde, I saw your hand up. I don't see that you actually, maybe this is your question. Sorry, folks, I'm a little older, and let me look. Okay, I have questions. All right. Okay. So Kurt and Cindy, welcome, Cindy. Kurt is often traveling all over the country, doing stuff. And so Cindy is actually who I hunt down because Kurt is usually in somewhere fun. We just talked about his favorite place in the country. I won't just, in case any of you love this place, I won't tell you where it was. But so I talked to Cindy a lot. So the first question is, Kurt mentioned earlier, these plans do not provide day one coverage. Would you explain? I think, Clyde, I'm just going to say, I think you misheard, but maybe I'm wrong. Kurt, if you want to go go ahead and answer. Does the product offer day one coverage? So if I write a policy effective September 1, do they have coverage September 1?
They do. It is the day that policy is placed in force, you have access to the full death benefit. I think where the misunderstanding may have been on how the accumulation works, right? So set that aside for a moment. This works like any other traditional life insurance, where if you pay your premiums, you get access to the death benefit, right? That's exactly how this works. Now, something you may be confusing this with also is our living promise. Our living promise has what's called a level or a graded. A level, you have access to our death benefit immediately. Graded means you have a 2-year pause before you have access to the full death benefit. An IUL works in the instance that, yeah, the accumulation amount and your ability to borrow against it will not be there on day one. But if it gets placed and you pass away tomorrow, 100% death benefit, all yours.
All right. Thank you, Clyde. I hope that answers that question. So there's another question about EAP and basically a sandbox. So we've got some agents, even though are writing a lot with you now, that haven't written with you and are looking to start. Do you guys have a sandbox feature, or what would you suggest an agent do that doesn't feel comfortable quite yet using your EAP? Do you have any advice or anything?
Yeah, don't be afraid of the EAP. I wish we had a sandbox. I know one is supposedly coming at some point, but I don't count on IT things until I see them. Believe me. The last thing, and Jim knows, because we've had several conversations where I can tell him that, hey, I think this is coming, but don't say anything, because until I see it, I don't believe it. Sandbox will come at some point. But what I would say is, if you go to that website, mutualofomaha.com/simple, go to the user's guide under the application section. It will show you a page-by-page, step-by-step kind of screenshot of how to do an application. They're not hard. They're not. Just what I would say, and I'm glad Jim brought it up, use your fact finder, gather all the pertinent information, get the doctor's information, all that stuff, because it's going to come down the road. But again, no sandbox just as yet. Use that screenshotted step-by-step thing to get a feel for it. But don't be intimidated by it. It's not anything difficult. It's really not.
And once you do one or two, it
go ahead, Cindy.
Easier, and agents love it once they get used to it. So just the first one or two might feel clunky, but yeah, agents love it once they get used to it.
And if you screw something up along the way, don't worry about it. I got an entire sales staff that can help sort that out. And if Cindy and I need to hop in there and clone in as you and look at stuff, we can do that too. So don't be afraid of it. We're not going to beat you up if you screw something up. These things are easily fixed. But again, if you're new to it or you're new to the process, I'd encourage you, go look at that step-by-step guide. It's actually very nice because it shows you, here's what this screen is going to look like. Here's what everything needs to be filled out, and it's a good guide. I think you'll like it.
And if I could just quickly add, and I don't want to push us too long on time because we do have a couple other questions. That's part of the beauty of an EAP in general, is it's got built-in safeguards. Now, can you submit an EAP not in good order? Sure, but compared to the old school when I was out in the field and everything was paper app, you're much more likely, even if you've never used an EAP, if the option is paper app or EAP and you've never gone through the app before, you're much more likely to either have an app in good order or less follow-up from the carrier than you would on an old school paper app. It's just by default, because as they program the apps, they actually built in kind of safeguards to say, oh, don't skip this, or oh, this doesn't make sense. This isn't supposed to be in this field. Now, it's not perfect, but it's better than a paper app. So just to add on that. So we had another question. So in the, I'm going to call it pre-screen process, right? The red light, green light process. I know the answer to this, but we're being asked if the information that you pull is going to be added to the MIB of the prospective customer. So do one of you want to hop on that, or do you want me to?
Yeah, no, that's fine. Yeah, anything that you do during that pre-qual goes nowhere because it's not an official application. There's nothing official about it. It's just telling you that, hey, based on our initial data pools, this is how your application is trending. Okay, so we have the ability to do all that because if you choose to stop it, I couldn't tell you what was going on in it anyway. It automatically gets dumped out of the system. It's no harm, no foul. It never gets submitted, so it goes nowhere. So there's nothing that ever shows up in MIB. There's no hits. And Jim brought this up earlier, right? It never counts against your client for the fact that you went that far because they were not declined. If you stop it because it said unfavorable and don't hit submit, they can honestly answer the question of, have you ever been declined for life insurance? They can say no, because they weren't declined, because it wasn't an official submission. So yeah, that shows up, that kind of data pull shows up nowhere.
And so with that, it might take you 1 minute, 2 minutes more upfront in the app process now, because they're going to kind of require that data that they need to use to pull those. But it's much more beneficial, especially if you've got a client that you're like, hey, let's try and see, and then because sometimes we are not in a black and white, right, world, especially with underwriting and stuff. Sometimes a client literally, you're like, I could see them taking you and I could see them rejecting you, Mr. and Miss Client. I mean, really, even if you're doing your best field underwriting, that's just real world. It happens. This helps. And then the last question we have is, you talked about loans being, or cash from loans being tax-free as long as the policy is in force. And the question is, how much of that money? Meaning, if let's say I've got cash value and I take out, 50% of my cash value, whatever that number is, of what I take out, Kurt, do you know, or can you answer what percentage of that is tax-free?
It's all tax-free. I don't like the word tax-free, by the way. I like tax advantage, but potato, doesn't matter. Anytime you take a policy loan out on a policy, as long as the policy is in force and not lapsed, it is not a taxable event. It becomes a taxable event if you have loans out on a policy and the policy lapses. Then the entire amount becomes based on when it lapsed, obviously. So you may have other outstanding loans with it, but it's based on the time that it was lapsed. But at no point do loans taken out on a policy that is not lapsed, none of that's taxable.
And I'm just going to add, because I used to work for an insurance company, that we do not offer tax advice. These are general understanding of tax laws and everything. But we do suggest that if a client asks you that, it's okay to talk in generality, but always, unless you are a licensed tax professional, recommend they talk to their CPA, their accountant, etc., just to make sure there's not some weird thing that we don't know about. Sorry guys, I worked for carriers for 15, 16 years before I came to Western Marketing. So, the good news is, great company, great product, great support, easy process, competitive rates. I mean, we could go on and on with why to offer Mutual of Omaha's IULE, but I think we've spent almost an hour of your time today. So with that, folks, I do greatly appreciate all of you who joined us on the webinar. If you have questions, feel free to call myself. I'm the National Sales Director here. I manage the life and annuity team on a daily basis, or either of our marketers. We've got Amanda or Tyler Marr, both top of the line marketers. Our number to our office is 800-852-7152. Again, it's 800-852-7152. You can ask for any of us. We'll gladly help you out. And so with that, everybody, thanks again. Kurt, Cindy, thank you for not only your time today, but your support and your friendship and partnership. It just shows how great Mutual of Omaha is by the people they employ. So With that, everybody, make it a great day, and we'll talk to you soon. Take care.
Thank you.